Yo, what's up, everyone? So, it's gonna be a chill stream. I'm just gonna be watching the 2023 mentorship. I was gonna watch it anyways, so might as well stream it. If any of you guys wanna talk to me or ask questions while I'm streaming this, while I'm watching it, feel free. But thought it might as well because I'm gonna be watching it anyways. So why not stream it? If someone wants to ask a question, or maybe if it gets even any subscribers at all, it's definitely worth streaming it. So I'm gonna be doing this. I'm on episode 6, and yeah, I'm locked in. I'm gonna finish this whole thing, and then I'm gonna go to the 2025 mentorship, and then I finished the 2022 mentorship, and then I don't know. There's probably more mentorships. I'm just gonna go through all of Ice-T's videos that he has on his YouTube channel. And yeah, let's watch this one. 57 minutes. Let's do this. And if you guys want to talk to me or have any questions for me at any time, let me know.
Welcome back. Hope everybody's doing well. We're going to be doing a quick review on Friday's price action. All right, so here ES is our daily chart. We won't be looking at NASDAQ today, so my focus was on ES, as you all know. If you've been following along my Twitter account, if you don't know what that Twitter account is, go to my YouTube channel on the main page, and you'll see in the upper right-hand corner, it'll say the official Twitter of the Answer Trader. That's my Twitter space. So if you recall, I mentioned that we were inside this trading range here. Until we get out of this range, you have to be a scalper. Okay, so I mentioned that this area here also, this is a volume imbalance. That would be a likely draw up into and above this short-term high, and we got that like gangbusters on Friday. Now, before you think I'm tooting my horn here, just note that this low at 38.22.5, and then this low right here at 38.14.5. Those two levels I was watching as a potential break, and then I targeted 38.14. I felt like we had a really good chance of doing that. The low came in at 38.19 even. On the micro E-mini, you can look that up as MESH2023. It actually went below the 14. So take a look at that, and you'll see an SMT divergence, and that means the MESH2023 went lower than the ESH2023 symbol. Okay, so just something out there for you to study. On the upside there, this was the draw I mentioned earlier in the week, and you can find it on the YouTube channel in the videos.
All right.
Whenever I make a notation of a level, especially if it's a daily chart, that is something you want to have on your chart at all times, and it needs to be visible on all time frames. And I'll tell you what that means.
Look at how the market respects that.
This is what you should have noted on your chart. So when we see on the lower time frame chart, this orange level here, this rectangle, that's what this is. Okay, it's rooted to this candle's close on December 15, 2022, and this candle's open on December 16th, 2022. Okay, so we're going to drop down into an hourly. All right, here's the hourly chart, and you can see this is the relative equal lows I was looking for as a potential drop down below that. So I was looking for that 30.14 based on these old lows. Okay, so in the event that non-farm payroll wicked down below that, that would have been what I was anticipating. And then if it would have done that, I would have been looking for something to draw back up into the very minimum right here. And then if it was to accelerate, obviously, going back a little bit further, looking up in here. And
yeah, all this
is
target
was mentioned
pool
as upside earlier in the week. On a non-farm payroll, I'm not going to hold something.
This may be the last ad you ever see, because with the free ad block extension from Capital One Shop
to that level, even for a demo trade. Okay, so just keep that in mind when we go through our example here. So we had nice sell side liquidity resting below these relative equal lows. Sell side is sell stops. Anyone that's long or wants to sell short, always trying to make money going down if the market goes lower. If it goes below that and rejects that, that is a stop grade. And then we would look for the opposing buy side, which would be here, here, and about here. And if it's really going to have an extrapolation to the upside, that orange box is that daily volume bounce I mentioned early in the week, last week. All right, so we're going to drop down into a 15-minute time frame, and I want you to take a look at this candle right here. Okay, that's Friday, and you can always have your chart at New York. You're going to be tired of me saying this all the time, but you'd be surprised how many folks on Twitter, how many times people will send me a message through TradingView. They'll leave a comment in videos. If I comment on somebody else's video, they'll ask, how do I have my time set like yours? Incidentally, also,
I always keep my time in New York.
In my commentary on Twitter, you have discovered that I am time traveling. I'm 10 minutes ahead of your chart. That proves I'm doing it live, because if you haven't subscribed to a live feed, that means you're not getting live data, and you can't trade with delayed data on TradingView. You can only do that with live execution with real-time data. Okay, so the reason why my chart looks like it's 10 minutes ahead is because I'm doing it with real-time data. and not delayed data, not market replay like a ninja trader. Okay, there's nothing wrong with practicing using a market replay function, studying price as it prints, but you can't press the button in TradingView. So it's kind of like a litmus test for those individuals that want to say that this is always hindsight or cherry picked. I'm putting it out there on Twitter. Everything's timestamped, as you'll see. So go to this candle right here. That is the midnight candle in New York local time, right there. And we're going to drop a level right there. So 38.47 and a half. We'll make that purple. Don't ask me why. I just want to go there. Think of Prince. I'm not a Ravens fan, by the way.
Guys, using midnight.
Ravens fan? No, I don't.
You got to
I don't
remember
like
to do that.
I don't
That's
like it at all.
super. That's super powerful.
That right there is our filter for power 3. Now, what does that mean? Well, for power 3, if we're thinking that it's going to go down, you would ideally want to see a move above it and then go back below it and then create some kind of selling opportunity and then reach down into that 38.14. But we got real close to 38.14. Well, 19 is, in my opinion, close. It's only like 5 handles away. So if we see this run up here on non-farm payroll at 8:30, and we're not trading on non-farm payroll. I pushed a button and managed the position, as you'll see here. And if you watched it already on Twitter, I showed a screenshot of each progression as I was calling each level. The whole business is on Twitter. So I'm trying not to steal the thunder from going through those tweets yourself. I know it's probably daunting for some of you. You want to have a handheld experience where I'm doing all the screen captures for you, all the busy work for you, but you're never going to learn doing that way. Okay, so I'm preaching to the folks that are trying to learn. If you are lazy, you will not do well here. Okay, so I'm demanding you spend time doing this yourself. I'm going to guide you, but you have to be able to do it yourself. Otherwise, your trading journal is going to be empty, or you won't have one, and you won't have the benefit of learning. So at 8:30, we had a run above that level, and I noted on Twitter real time. I said, take your attention to 38.14 because it could easily just spike down there. Now, had it done 84.14, and if it expanded beyond that, I had 38.04 also noted as a potential level. So in the event, because I don't know what they're going to do with the employment number, this is the reason why I don't trade this non-farm payroll event. Now, I've taught my students in old mentorship that there's a way to trade the market after that first 30 minutes or so on non-farm payroll, but it's not something that I would advise anybody doing. It's good for studying price action. And I gave an example of walking through it on Twitter, calling the levels where I thought it was going to go, and pushed the button and managed to stop and manage position.
But notice how midnight open serves as a reference point for the entire day, and then the ideal buy occurs when we go back below midnight, and then you can look for your trade within this segment of price right here.
And partials and double business, and you'll see obviously the executions here. But we failed to go back below this low here. And when we go into lower time frames, it'll make more sense, but let's drop to a 5-minute now. Okay, so we have an imbalance here in the form of a buy side imbalance, sell side inefficiency. That means buy side was offered. It's inefficient in what? Sell side. So in other words, it needs to have some movement between this candle's high and that candle's low. So your focus should be right in here. This range. Okay, right in here. This candle's high and this candle's low. There's only one candle between those two candles. It's this one here. And it's one big, beefy, caffeinated candle. Okay, back in the 90s when I was doing a live S&P trading room on Internet Relay Chat. Yeah, that's how old I am. Every time we would create a big candle like this, I would call it a caffeine bar. And it's just a lot of energy. And you hear me sometimes say, I want to see an energetic move. Every time I say it, my mind goes back to the good old days on Merck. But your eye should be gravitating to these types of movements. This is a buy side imbalance, sell side inefficiency. Its category for a PP array is fair value gap. But its distinction is
buy side imbalance, sell side inefficiency is literally just bullish for value gap. Sell side imbalance, buy side inefficiency is literally just bearish for value gap.
Buy side imbalance, sell side inefficiency. BISI. B-I-S-I. Okay? So don't bother Googling it because this is all my language. This is my vocabulary. I created this so that way you can differentiate what it is I'm referring to. And throughout the year, you'll know exactly what this is. Okay? By the time this time next year, you're going to be a pro at it. So you can see how we went down into that area here, dipped into it, and then turned around and attacked these relative equal highs. Now, before I drop down into the 1-minute chart, I want to kind of take you through this thought process. Right down here.
Notice we have a sweep of these lows, break of structure for value gap is retraced to within discount of this displacement leg. So this is the 2022 model right here.
38.14, because we could have easily spiked back down through here, cleaned this area up, ran the stops on anyone that was long with stop losses below the old 15-minute low. Let me bring it back here so you can see. So here's old lows here, and there's one more segment of price action right there. That's where those sell stops I was referring to all week. So if it was able to do that, that's fine. Then I would have been looking for a run to take these out, but it didn't give me that. So go through my tweets on Friday. You'll see me refer again as it's dropping down. Pay attention to 38.14. But then we get into this area here, which I was watching, but I want to see proof. Okay, I want to just go in there and co-sign something on Twitter and not have any idea what it is I'm looking for. I want to see proof as to what it would likely do. If it's not going to go to 38.14, that's fine. There's no trade there. I'm not selling short. I want to see if it can get to 38.14. But if it cannot and it rejects this buy side imbalance, sell side inefficiency, what does that mean to reject? Well, it's not getting through it. So in other words, in the easiest language I could provide for you in regards to that, the lowest portion of that range between this candle's low and this candle's high, anytime you have a big one single candle and it's separated with the candle's high before it here and a candle after it's low here, and it's just that range that's shaded in blue, there's only one pass, one candle, okay? That is significant when price is coming back down into it. But when there's high impact news drivers like, well, non-farm payroll or FOMC, it can overshoot these areas. Okay, so when I'm looking at price action, if I don't have a high impact news driver like FOMC or non-farm payroll, which I would be trading on non-farm payroll anyway, despite what you're going to see later on, on a regular day, like a medium impact or high impact news driver that's not FOMC, in other words, it's an interest rate announcement based report that's coming out, or just non-farm payroll. If I'm just studying price, I may be looking at non-farm payroll a couple times throughout this year with you all, just to reinforce the idea of what it is I try to avoid doing on non-farm payroll. So that way, you want to see me lose, you want to see me get it wrong, I'm going to stand in front of you live on a non-farm payroll and do the whole business right in front of you. And you'll see why I don't want to touch that day, because the elements of precision are likely to be outside my grasp. And it's because it's highly manipulated. So if it's highly manipulated, I don't want to be in that. Okay, and you shouldn't want to either. Now, if you're forced by compulsion or lack of discipline, you just have to be in here studying on non-farm payroll because you feel drawn to it like a moth to a flame, demo it. Okay, don't trade it live, and then you'll see quickly why you shouldn't do it. Okay, but this purple level here, look what's happening. The market drops back down. I gave it the likelihood of maybe it ran up in here to get above the opening price, and then does it break below this area here, and then tag the 3014 level. Now, if they would have went below 3014, came up into a fair value gap, I would have looked for a run to 3804. And you can find that 3804 level on your daily chart. It's an old daily low. There's your homework assignment for that. But it doesn't matter because I already gave that out. I already gave it out in the previous discussion about why the levels were being done. And I think that would be seen, or heard rather, on my Twitter space that's on Friday morning, why I don't trade non-farm payroll. So I gave you the level specifically there. But if you don't want to listen to that Twitter space, you can obviously go through the daily chart and find those old daily lows, and you'll see where 3804 is. Right? So anyway, because we failed and rejected to go below this level here, you're going to have to drop down to a 1 minute chart, which we'll do now. All right, so here's that same buy side sell side efficiency. It's been refined to show on just the 1 minute chart. So we have that drop down in here.
Yeah, bro, I'm just locked in right now. And, yeah, feel free to watch with me if you want, but, you don't obviously don't feel like you need to. This is going to be really boring. I'm just wanting to keep showing up and keep learning, and I don't care if I have to watch every single ICT video that exists on his YouTube channel. I'm going to do it, so if you guys want to watch with me, feel free. But I'm going to be here just live streaming it, and the reason I'm live streaming it is because, well, I'm going to watch it anyways, so if anyone wants to watch it with me, well, I'm live streaming it, so you can. So, yeah, that's the whole point of the live stream. If you want to watch it with me, you can, but, yeah, it's going to be really boring, so.
Then we rally, and if you look at the tweets, you're going to see a weird tweet where it says, put a line on 38.39 and 38.36.75, I think that's what it is. And I read it wrong, and I got 50-year-old eyes, folks, I apologize, but what I was trying to get your attention to.
Should I switch to Monday CRM? I've been trying to configure this field for an hour, but this CRM sucks.
Was here, okay? This little area right there. If that can stay open, and this is what I was going to get at, this area here, if that stays open, in other words, it doesn't trade back down into it, let me highlight it here. All right, so that area there stays open, in other words, the price doesn't go down into it, and a short-term high is taken out. Here's a short-term high right there. Okay, so this stayed open, and this short-term high was taken out to the upside. There's a small little gap right in here. Notice where all of this is occurring. See this dotted line here? You're going to see a tweet that I'm going to be able to put right on top of the chart, and you'll see how right here I'm calling that the 3876 buy stops are in the crosshairs. That means that I'm watching to see if this level stays open and if we get above the short-term high right there. Because if we
So this ends up being a breakaway gap right here. Then we break this high. I'm surprised we don't use this for value gap, but
do, then it's likely to do what? Run to take out these relative equal highs. See, in retail books and educators that teach support resistance, which I don't trade, they're going to see that as resistance. It went above this high here, it went up here, stopped, dropped down aggressively. So naturally, anybody that wants to make money, they're going to think, get short. And as long as it doesn't go above here, you're good. But a stop loss up there, it's fine. Well, I teach my students how to attack retail logic and theory because it's based on fallacy. It's based on things that aren't making the market move higher or lower. It's providing bullseyes and targets for people to hunt liquidity. Now, you're going to see a lot of educators, if you haven't already seen it already, and I get a lot of this from other educators, they'll talk about my opinion of the marketplace, and they'll say what I'm saying is flawed logic, and they'll say things like, nobody's hunting your stop. Well, that's not true. Because if it was true,
it's not true at all.
Then you wouldn't see my concepts be as precise as they are. The market is delivered on the basis of liquidity and imbalance, rebalance. That's it. That's the only thing that's happening. Otherwise, it's some kind of unexpected event where manipulation comes in, where nobody can determine what it's going to do, and you're going to lose regardless if you're in the marketplace. That's unfortunate. That's what happens sometimes, but that's the inherent risk. That's what everybody takes on when they speculate in these markets with real money. So when the market does, in fact, trade above the short-term high here, and you retrace it down into this area here, what area? This candle here. From the high to the opening, right at that dotted line. What is that dotted line there? That's the midnight opening price in New York time on Friday. So power 3 is what? We're now thinking it's going to go to here. You'll see proof of that because I've tweeted it. And you still see the tweets that haven't been changed. I don't delete any tweet. No tweets being deleted, ever. As it drops back down into this candle's high to open, I'm getting real close to that midnight opening price on Friday. So that means I'm doing what? I'm going to try to buy at or just below the opening price at midnight. Because my expectation is, and this is what I teach my students, if this is what the range is likely to do on the daily chart, in other words, this hypothetical candlestick. Okay, let's say this hypothetical candlestick represents the daily chart. Okay, and I use obviously green. So let's use this here. Okay, so we have...
That's an ugly candle. There you go.
This scenario
looks a little
here,
better.
where we're expecting the opening price. Now, again, think about this candle on the daily time frame. Right now, we're looking at a 1 minute chart, so don't be confused by this, okay? I'm just showing you the logic. The opening price would be this price right here. And what gets confusing for some of you, and it's because you haven't been properly mentored, you just listen to other people take my stuff and teach you incorrectly because they're not paying attention, they're not taking notes, and they haven't learned how to trade profitably with the concepts. So I'm trying to correct all of you. Okay, I know you're overzealous and you want to go out and make your courses.
I need to go get my phone so I can take notes. Where is my phone anyway? I'm going to keep it playing.
And your mentorships and all that other stuff, but you're actually hurting people. Okay, so there's a lot of reasons why I'm doing what I'm doing this last year, but pay attention, because if you're trying to rip me off and rebrand my stuff, at least do the benefit of helping the people that's going to be affected by you teaching my stuff incorrectly by doing it at least better than you used to. And that means by doing this. The opening price at midnight, New York local time, that is your daily opening price. I don't care what TradingView's opening price is when you put it on the daily chart and like look at the daily candle's opening price. That's not accurate. Okay, that's hours and hours away from what it is that the algorithm is going to refer to. You want to have New York at midnight, that opening price. Just pull up a 15-minute time frame and you'll have it. So you want to have that price noted. That's what I have here. Remember, we walked from the 15-minute chart.
Listen to that very carefully. New York.
If we're bullish.
New York midnight is the true opening price. That is the true opening price. And TradingView, whatever it has on TradingView, it doesn't matter.
Hours away from what it is that the algorithm is going to refer.
Listen to that.
The opening price at midnight, New York local time. That is your daily opening price. I don't care what TradingView's.
Okay. 2023 mentorship. I'm gonna take notes on this. If anyone's watching, definitely take note on this. Midnight open is the true opening price for the day. do not. Let me just replay it real quick.
At least do the benefit of helping the people that's going to be affected by you teaching my stuff incorrectly by doing it at least better than you used to. And that means by doing this. The opening price at midnight, New York local time, that is your daily opening price. I don't care what TradingView's opening price is when you put it on the daily chart and like look at the daily candle's opening price. That's not accurate. Okay, that's hours and hours away from what it is that the algorithm is going to refer to. You want to have New York at midnight, that opening price. Just pull up a 15-minute time frame and you'll have it. So you want to have that price noted. That's what I have here. Remember, we walked from the 15-minute chart and extended it out in time. If we're bullish.
That is so interesting. The market is not going to care about anything other than midnight New York time. So remember that, guys. Remember that.
By having this level on your chart, you want to be buying at that level or beneath it. In worst case scenario, you want to be buying near it. So your thought process would be like this on the daily chart. You're watching, and you'll see me doing this with live commentary.
Wait, let's rewind that.
So your thought process would be like this on the daily chart. Worst case scenario, you want to be buying at that level or beneath it. Have extended it out in time.
So if you're bullish, you want to be buying at midnight or beneath it. If you're bearish, you want to be selling at midnight or above it. Okay, let's keep it going.
If we're bullish, by having this level on your chart, you want to be buying at that level or beneath it.
I don't get why the TradingView candles do not respect midnight then as the open of the day, but
in worst case scenario, you want to be buying near it. So your thought process would be like this on the daily chart. You're watching, and you'll see me doing this with live commentary starting in February, where I'm expecting the accumulation phase on the daily range to occur below a specific level, and you'll see how you're in the 90% club.
What would you say to somebody that hasn't tried therapy before?
Just ask yourself if what you're doing in your life right now is working. If you have peace.
Okay, if you do these types of things and your draw on liquidity, what is that? Well, let's just say this level up here was the 38.95 and a quarter level. Don't be discouraged or distracted by the actual price here.
Watching. Probably
But
not.
let's just say that was your draw on liquidity. Okay, I don't want to be unrealistic and say that you would have known about the volume and balance had you not been watching the videos. If you were watching the videos, then obviously you would have. But let's just say that was your draw on liquidity for buy side.
There's one person watching
Based on the weekly chart, based on what you expected in terms of higher time frame analysis. I can say this because you watched me do it this week. Even though I was looking for something down here, it matters not. What I'm showing you is the logic as how I shifted gears intraday Friday and worked in this whole scenario here. But you would be trying to buy below the midnight opening price on any day. Don't think this is just a non-prop payroll event.
So this line right here, that's midnight. So we're looking for our entry within this area below midnight because we're bullish.
You're trying to buy at the opening price or below on the daily candle when you're bullish. And if you get above the opening price like you see it doing here and here, as it goes back close to that opening price, you can be a buyer there too, if there's logic behind it. And the logic I used was these two down close candles is a bullish order block. It's also a swing high. We went through it here. So this is what I teach you to look for what? The shift in market structure, meaning the market has tipped its hand to you that it wants to go higher. So if it's going to go higher,
We should go in the charts and look at this probably when after this episode's over.
going to go to, well, you have an imbalance right here, right? Yeah, that's fine. You have a bearish breaker here. That's fine too. But look closely. Actually, take a step away from your computer screen, back up in your room right now. Look at this chart a little bit further away, about 10, 12 feet away. You're going to see these levels here are way too smooth. It looks too perfect. It looks too much like classic support and resistance. And here's a note that you want to have in your study journal. And anytime you see levels in your chart that are like this, or they're just too perfect and smooth, I always say this, okay, but smooth edges like to be made jagged. That means when it's smooth like this, the market will rip into that and make it jagged. It doesn't like to have smooth highs and smooth lows. It will always find a way to go back into those levels. May not happen right away, may not happen the same trading day, but it
Look at how this is just a nice giant buy model right here.
will always look to go into those levels again. That's what the algorithm does. So let's go back to our analogy. Let's assume that this level here is this level right there on the daily
And look at how nicely these equal highs are placed right here.
chart. So that level, for whatever reason, we think there's something up here that is going to be a draw on price. Okay, liquidity up here is making the highest probability that the market will want to gravitate to that level, and that just happens to be on our daily chart. That's the level you would have. Well, while you're watching price, when it's down here like this, meandering around like it was doing here, I'm not paying attention to all of this. This is all based on the reaction to 8:30 in the morning, not from payroll. So I'm not worried about this price action. I look at this and ignore it. I want to see where the real range is. It's here. Then they did this fake run. Okay, it looks like it's going to break this, but it doesn't, and tears off, goes lower into our buy side and balance, sell side efficiency. Then we wait. Does it break lower? I'm not chasing it. I'm just observing it. I'm watching. I told you, note 38.14. See if you can get down there. It didn't want to do it. Then it rallies away, leaves this area in here, and I gave you the two wrong price action
So here's your first fair value gap. I guess we don't retest it.
levels. If you look at this low here, you're looking at this price right there. If you look at this candle's low, it's 38.25. 38.25. And I said 38.39. I believe that's what I tweeted. It was inaccurate. I apologize. 38.39.25 is wrong. And I was looking at this level here, the high, 36.75. So that's what I was looking for, and I was watching. Obviously, you know I'm looking at a 1 minute chart. I was commenting over a 1 minute chart. But I wanted you to have that on your chart. I told you to have a line on this level and this level. The reason why, because I was going to come back and talk about this level today. More specifically, I was going to do it Friday, but I didn't have the time to do it, but I apologize. But the market wasn't able to get down to that. And then with this short-term high, it breaks above it. So there's a shift in market structure there. So I'm looking at all of this area here below the opening price, and now this level is this. Conceptually, in my mind, this is what I'm seeing the algorithm refer to. I don't care about this. I don't care about every candle prior to that. See, when you're looking at price action, you're getting caught up in all of this noise. My focus, my absolute focus, is only here. Right there. Inside that box. That's what I'm focusing on. That's the initial framework that the algorithm's going to work with him. Why? Because that's the dealing range. This is where we are. This is where we made the high
Interesting. So this is the dealing range right here.
for the day. We've left liquidity in place in the form of buy side. We've broke down back into a discount. We have not went lower. We created a short-term high. This range was not closed in or even retreated to. Then we had a short-term high broke there with this candle moving higher.
Wait. Is this not a break of structure right here?
And I was looking at this level here, the high, 36.75. So that's what I was looking for, and I was watching. Obviously, you know I'm looking at a 1 minute chart. I was commenting over a 1 minute chart. But I wanted you to have that on your chart. I told you to have a line on this level and this level. The reason why, because I was going to come back and talk about this level today. More specifically, I was going to do it Friday, but I didn't have the time to do it, but I apologize. But the market wasn't able to get down to that. And then with this short-term high, it breaks above it. So there's a shift in market structure there. So I'm looking at all of this area here below the opening price, and now this level is this. Conceptually, in my mind, this is what I'm seeing the algorithm refer to. I don't care about this. I don't care about every candle prior to that. See, when you're looking at price action, you're getting caught up in all of this noise. My focus, my absolute focus, is only here. Right there. Inside that box. That's what I'm focusing on. That's the initial framework that the algorithm's going to work with him. Why? Because that's the dealing range. This is where we are. This is where we made the high for the day. We've left liquidity in place in the form of buy side. We've broke down back into a discount. We have not went lower. We created a short-term high. This range was not closed in or even retreated to. Then we had a short-term high broke there with this candle moving higher. So in my mind, I'm thinking this level.
Yo, that was incredibly valuable, and he probably doesn't even realize it. But most people probably wouldn't consider this a break of structure because, we wick above this high. But this is still a break of structure because this placement is obvious. Interesting.
Back into a discount. We have not went lower. We created a short-term high. This range was not closed in or even retreated to. Then we had a short-term high broke there with this candle moving higher. So in my mind, I'm thinking this level here, this line represents this here. So I'm looking at the daily range like this. Even though, that we have traded up here and we've already essentially been here, I don't care. I'm thinking about it just like the algorithm will, if we want to personify the algorithm. So when it's coded to refer to an old dealing range, that's what this is here, this high to low, I believe it's going to do what? Expand outside of that range in the form of external range liquidity. It's going to go outside the boundaries created by this high and that low in the form of a up move. You'll see me tweet as you go through Friday's tweets, and you also see me actually copy a tweet's link, and you can put them in your TradingView chart. Just copy my tweet or anybody else's tweet, and right-click on the chart somewhere and click paste after you copy the link of any particular Twitter post, especially mine, because you want to be able to hold me accountable. Everything I say on Twitter, go through each day and post what it is I drew your attention to. I'm not deleting anything. You'll never see me delete a tweet. It will never happen. If I'm right, you're going to see it. If I'm wrong, you're going to see it. It is what it is. I'm out here without a safety net, okay? I'm walking the high wire, and I have no shame or fear of it, okay? It is what it is. But I'm also teaching that non-farm payroll is a day that you don't want to be trading. So I really wanted to do poorly on non-farm payroll so I can say, see, this is why. So don't read into what I'm about to show you, because don't think that it's me saying in secret, hey, yeah, we all really trade non-farm payroll. No, we don't, okay? We're not trying to do that. But you can practice it, and that's fine. But this little segment of price action, that's the focus. That's the setup. That's the only thing that you would need to be concerned about at the moment. You don't worry about the hourly chart. You don't worry about the 4-hour chart. You're not worried about the daily chart. You're not worried about the weekly chart. You're not worried about the 15, the 10-minute, the 7-minute, the 3-minute, the 2-minute. This is it. This is the framework right here. The fact that it shifted above this short-term high right there sets the stage for a run above here. Okay? And I don't know, and you didn't know, that it was going to go up to 38.96 in a quarter. But once it got above this level here, I took 10 contracts off of a 12 contract position, and I left 2 contracts on. By having that run above that 38.76 and a quarter level, I drew your attention on Twitter to 38.95 for buy side. And then I had a limit order at 38.96 and a quarter. And it reached up in there and did its business. I also had 38.85, noted it's an old daily high as well. And you can find that level on your daily chart. Go back over the course of last week and you'll see previous day's highs. 38.85 was another level that I tweeted. Okay, I'm not going to have that tweet on the chart because it becomes too much. But you're welcome to go through my tweets, and whenever I'm giving you key levels or things that I'm looking for the day, drop them on your chart after the fact. Like if you're in school, if you're running a business, or if you're working your job and you can't do it live when I'm doing it, it's educational for you to see where on the chart I was saying it, and then find the things I'm teaching you. Okay, and trust me, by doing that, it will provide you a better perspective on what it is that was being done at the time. Even though you don't have the benefit of being there right then, at least this is the closest thing you'll have to seeing what it is I was trying to draw your attention to. So back to this example. If it's inside this, let me go back here. If I'm just looking at this shaded area here, let me do this. So inside that, and that's not a nice color. I'm looking at this shaded area in here. And I believe it's likely to go from here, if it takes out this high, from here up to here. So I'm envisioning the daily candle looking like this right now. Even though we've already been here and came down, right now the algorithm is thinking, okay, we're real close to the opening price at midnight, which is right there. We ran above it, so it did this. It went up a little bit, and now we're back down inside the middle of the range that would be represented by this low to this high.
Back test.
And when it drops back down, it's getting real close to that opening price again. So it's doing something like this. Okay, and I'm anticipating that the daily range will now expand up into this level here where buy side would be, which is represented by this high here. That's why this red line's being annotated on the chart. So I'm expecting price to keep gravitating higher, and that would be something like here, and then continuously gravitating towards that high like it's doing here. I'm not getting tricked into thinking it's going to go down. This level's way too clean. Clean being it's smooth. It's like relatively equal highs.
Relatively equal highs here, 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 and here. And this is also a giant accumulation range.
The market's not going to leave that. And I actually tweet also. I said, I do believe we're going to go to 38.76.25 because it's so close it would be criminal to leave it intact. Okay, so all this time it's dropping down. I'm not worried about it not going up there. So it gives you the confidence to stay with the idea. And then finally when it runs above it, like that, this is what the daily candle looks like. And I'm going to watch and see, does it keep digging into my next objective, which would be an old high at 38.85. So with 38.85, which being an old daily high, there's a buy side above that. Why do I know that? It's just the way it is. Large funds like to use previous day's highs and lows. So that liquidity is real. It's not theoretical. It's not something like you see on a DOM, a depth of market ladder, or something to that effect. That's why I'm not a fan of that, because those things can be spoofed. Fund managers are not pulling their orders in and out. Okay, they're placing them there. They're hard, and it's going to be what it is. It's going to run to them, and that's why that type of perspective on where liquidity is: old daily highs for buy stops, old daily low or lows for sell stops, and you can make a lot of money trading those types of pools of liquidity. They can act as targets, and they can act as a framework for entries. Okay, so as you can see, the market does in fact trade up to there as well.
So after this video is over, one thing we can consider is we can take a look at recent price action and see if we have any examples of this where we go below midnight and we're bullish on the day and we expand up to buy side.
And I took a partial there, and then I left one contract on for 38.96 and a quarter. And that level being the next draw, and you'll see a tweet. And the whole time it's doing this expansion up, higher, higher, higher. And we're not thinking, oh, it's going to collapse in reverse, because the candle, if it's going to have a big move like this, it's probably going to close near or at its daily high. Now think about that. Because if you can do this, you can hold on to the last hour of trading, which would be 3 o'clock. And then something happens at 3 o'clock I've already taught you, or I've introduced to you, where the market can come back into its range. And I want you to see it like this. Okay, so we can see that it goes up into that daily volume imbalance. Remember that orange rectangle I drew on the daily chart time frame? It goes right up into it. Look at the bodies of the candles respecting the top end of that. Then it drops back down into the low end of it, bounces around, hangs in there, and then leaves it. See that? And here is 3 o'clock, right there. So if your target happened to be this daily volume imbalance, that could look like something like this. So in your mind's eye, and tracking what the daily range would look like on a daily chart, I mean, you would
below
obviously
midnight is your entry. That's the blue box right here. The orange is the daily volume imbalance. That's your drawn liquidity, and that's where the market expands up to.
A daily chart referred to throughout the day. That gives you the confidence to stay with the trade. Because I get a lot of questions all the time. How do I stay in these trades? How do I not get shaken out of them? Because I'm thinking like this, because this is my concept of power 3. Power 3 is accumulation, manipulation, distribution. So accumulation, smart money's doing longs at that time. I didn't know for certain. I have to wait for 8:30 to come in, do the manipulation, and then it will tip its hand. And I just walk you through that based on the short-term high being broken and the inefficiency for the market to fill in that buy side and bounce sell side inefficiency. So 38.14 was no longer a factor, and the tweets took your attention to, now we're going to look for 38.76 and a quarter, then we're going to look for 38.85, then we're going to look for 38.96 and a quarter, and then unfolded like a script. So in my mind, I'm thinking this is the daily candle. I'm not being swayed by all the little minor fluctuations on these 1 minute candles, which is what makes everybody think that it's noise. It's not noise. It's the same price that the candle's using to make the daily chart candlestick. This is a matter of knowing the rules of engagement and knowing that, okay, once we get to the last hour, 3 o'clock, if it gets to a target like that, be done. Be content with that, because it's likely to do what? It's likely to pull back into the range and create a little bit of a wick at the top end of the candle. So inside this little area now, this little retracement, and it closes off the high. So if this is the high, let me get this box out here because it's going to keep flittering. Flittering, is that even a real word? I just made it, so let's go with it. The high here, we're going to say is that. And it might pull off and then close trading for the day right there at closing price. So we see it over here. Here's the high, short-term low. It breaks, comes back up into a volume imbalance. We're just going to tag sell side right below.
Look
here.
at that.
Boom. Where's it
Look,
closed?
the market respects that volume balance right there. Volume balance right here, respected. We distribute lower off of it.
Off the high there. So it looks like this for the daily candle. Okay? And we're very close to it because it's not the best in terms of scale. It won't look exactly like that. But conceptually, it's obviously the best I can do artistically. Okay? And for the purposes of looking at the daily chart, let's look at the daily candle now. And there it is. Okay, so obviously, if you're new, this is the first time you watch the video from me, and you're
So
looking at
volume balances are pretty good draws on liquidity. So anytime you see this, understand it could be a good draw on liquidity.
this one, it's going to look like, oh, well, you know, anybody can do what you're doing. You're talking about it after the fact. No, go back a couple days ago, last week, and you'll see me actually refer to this level right there, and that's where it's going to draw to, which would be above this high here. The next high would be what? This one. So there's buy side above that, and there's a little volume imbalance. You don't see this taught in books, folks. Okay, it's not classic support and resistance. It's not same side and supply and demand stuff. Okay, Chris Lloyd doesn't teach this. Larry Williams doesn't even know anything about it. Okay, nobody's teaching this but me.
Larry Williams doesn't even know about it. That's a crazy claim.
And there it is. Okay, so obviously, if you're new, this is the first time you watch the video from me, and you're looking at this one, it's going to look like, oh, well, you know, anybody can do what you're doing. You're talking about it after the fact. No, go back a couple days ago, last week, and you'll see me actually refer to this level right there, and that's where it's going to draw to, which would be above this high here. The next high would be what? This one. So there's buy side above that, and there's a little volume imbalance. You don't see this taught in books, folks. Okay, it's not classic support and resistance. It's not same side and supply and demand stuff. Okay, Chris Lloyd doesn't teach this. Larry Williams doesn't even know anything about it. Okay, nobody's teaching this but me. Okay, and I want you to understand that if I had a way of showing you where to find this information quicker without having to do all this work, I would do it. Okay, believe me, I would do it. But it doesn't exist anywhere else. Okay, so when I codified these concepts, these things are going to be shown and taught correctly from me. There's no other outside source but me. So I want you to learn it correctly. That way you're not going to hurt other people trying to be smart and pretend that you can run a mentorship when you don't even know what you're doing. All right, so here's the 1 minute chart. And this is the best I could come up with conceptually going through the individual fluctuations. And this chart, with the exception of the actual tweets you see here, you can see the times.
Oh, look at this. Okay. Every single fair value gap after we break structure supports price. This is exactly what I was talking about yesterday. It's interesting.
And don't take this for what it is being shown here. These are actual links to the tweets. Okay. And if I click on
buy stops 3876 in the crosshairs. Yep, that was right. I believe 3876 is the next draw on liquidity. That was right. Screenshot. That's crazy.
This right here, it'll take me to the direct link here. If I click on this one, it will take me to this tweet here. If I click on this one, it will take me to that one. Just go back and look at Friday, January 6, 2023, at these respective times, New York local time, okay? And you will see that these tweets are, in fact, right there, 3876 buy stops. What is that? That's right here. Folks, if I can't see it, I would not be able to do this, okay? I'm not going to always be on live streams. Obviously, I've only committed to 2 a week. But once I get one good move for the week, I'm done. Then I'll do something like this for the other day. I don't want to be caught up in doing live streams.
Look at this. Break of structure. There's not really a fair value gap, but there is a breaker. We retest that. And then we retest this fair value gap. And this is a breakaway gap.
All the time. Okay, and I don't want to create the opportunity for you to fall into a dependency on it. Because I'm only trying to teach you to do one good setup per week. And I know some of you are like, oh, well, we need to see. No, we don't need to do anything except for practice. That's what we need to do. Okay, I can do this. And it's not for you to be copying, because that's exactly what some of you are wanting to do. But I can teach this effectively through tweets too. And this is proof of that. Now, the drawdown on this, or drawback should be, is I won't be able to show like the US 500 CFD. And a lot of you are not able to get the real-time data or trade this futures contract, ES. I will, on my live streams, find a way to toggle back and forth between ES 500 and, I'm sorry, not ES 500, US 500 and ES futures contract interchangeably. Okay, so if I'm looking at something that is on ES, I'll flip over to the US 500 to kind of give you guys that are following along that at least the baseline idea where we're studying and practicing. Okay, and the same thing for NASDAQ. If we're looking at NASDAQ or NQ futures contract, then I would be showing you the US 100 CFD. Okay, so or the for those that can't trade the futures contract. All right, so let's get through this. I got a lot of things I'm going to cover here, and then give you my opinion on Forex. I know some of you just don't care about this market here as much as it is a beautiful market to trade. But here's the buy side and balance, sell side efficiency, and over here, let's scrub back here for a moment. Here's a high with a low prior to it and a lower low, so that's a bullish breaker. So it's not on my chart because I'm doing all this stuff, commentary and monitoring it, and trying to screen capture and share things on Twitter. It's a lot to manage and a lot to do, and I don't have the time. I don't have the benefit of time to do all the things and type out all this stuff here. And you see when I do my recordings, it's I have no time to do anything else but just that. But what I was watching is down here, when it came down to this breaker, and it rallied above this short-term high there, I was trying to prompt you all on Twitter, but I gave the wrong levels. And all you got to do is put those levels I tweeted in, and you'll see they make absolutely no sense. There is no fair
I'm surprised this fair value gap, he wasn't talking about this being an entry.
value gap on those levels. But I was trying to draw your attention to this. So it was a typo during the heat of the moment, and it is what it is. But this short-term high here, I was looking at this short-term high being broken right on this candle here, the same way I'm telling you this one when it came.
So this was a breaker structure, and this fair value gap was valid. We just never came back to it. I'm pretty sure.
Through it there, that's a dead ringer. It's going right here. Okay, and you can see that by me tweeting at 3876 buy stops in the crosshairs.
So breaker structures are very, very valuable.
Right there, as that candle's dropping down, bang, right into the order block. This short-term high is a shift in market structure. Now I have two shifts in market structure. This short-term high here, and this gap stayed open. Then we have a shift in market structure.
Wait, listen to that.
It came down to this breaker, and it rallied above this short-term high. All you gotta do is put those levels I tweeted in, and you'll see they make absolutely no sense. There is no fair value gap on those levels. But I was trying to draw your attention to this. So it was a typo during the heat of the moment, and it is what it is. But this short-term high here, I was looking at this short-term high being broken right on this candle here, the same way I'm telling you this one, when it came through it there, that's a dead ringer. It's going right here. Okay, and you can see that by me tweeting at 3876 buy stops in the crosshairs. Right there, as that candle's dropping down, bang, right into the order block. This short-term high is a shift in market structure. Now I have two shifts in market structure. This short-term high here.
See, this counts as a shift in market structure down here. This counts. That's really good to know.
and this gap stayed open.
And this
we have
does
shift
too.
in market structure above this
Even though it was a wick, this counts.
high with this candle right there. And we have this fair value gap left open. When this thing starts to run higher, I'm confident that I'm on side. What do I mean by that? I'll show you in a second, just settle down. Then we have a order block here with this drop down. The market accumulates right now, so this little trend line is here on the opening price. And we have a fair value gap. So it bullish order block, trades to it again, it's a retrade, then it leaves it, then comes back down, and it comes what? A reclaimed order block there. Okay. So
Reclaimed. Anytime we retest an order block after we've already tested it.
this is not institutional order flow entry drill. Institutional order flow entry drill is when you have an open range in the form of a fair value gap, and it drops down one tick below the framework of the high, like it does here. Look at this candle's low. You're looking at that price right there. This candle's low is what? 38.77 and a half. This candle here trades down into what? 38.77 and a quarter. That's institutional order flow entry drill. That's mine. That's my name. Don't Google because you're not gonna find anything about it. What's actually happening is high frequency trading
You'll find my video.
being entered there. Okay. There's nothing more I can teach you about it except for the fact that if I trust the fact that these ranges are not going to close in, I'm going to use that as another area to build a partial and build a pyramid position larger. In the event that I do it wrong, I can still be a buyer here and do a pyramid entry. I'm not saying I did it here, but I'm just saying that in other instances where you see me doing my recordings and I'm recording my management and stop placement and building another entry in to build the position bigger, sometimes I'm buying what I believe is institutional order flow entry drill, and it goes down and closes in the fair value gap. I'm not intimidated by that. It's okay. It just gives me the opportunity to get in, and then if I have room or leverage still in my equity in my position, if it goes down to the lower end, I can buy again one more time. So whatever position I put here, I'll duplicate that here. So in order to say it was dropping back down here, I could be a buyer of one contract. Say I may have 6 here, 3 here, 2 here, and then I'll do 1 here. But if it dropped down one more time, I'll do 1 more as the low end of that fair value gap. I won't do 2 or anything higher than that. I'll just do the same thing I did on the lowest new pyramid entry. And it won't be that big of a deal because I have all of the equity behind all these positions still in my favor, supporting it. So I don't look at it as adding to a losing position because I'm already stacked with all this equity from here to here and all up to here. And I've already taken a partial here and a partial here. So I'm not going to pyramid on a move like this, which is why you're going to ask, okay, well, when would you not want to pyramid? As you'll see, I took a partial here, the largest portion of it, and a partial here, and the last portion came off here. So just look at these tweets. 38.76, buy stops are in the crosshairs. That's this. 38.76 is the high, buy side liquidity. Buy stops and buy side liquidity is the same thing interchangeably. In the crosshairs means it's likely to go up there. Okay, that's what my language is implying there. And then this tweet, follow the line to it, goes right up to that candle right there. What's the time of that candle? Look down here. What's the time on that candle? 10:08. 10:08. I believe 38.76 and a quarter is the next draw on liquidity. I would want to see big move with speed above 38.75. When's that occurring? Right there. And 38.75 is right there. Right there. Right there. And what do we get? Expansion through. We got it. And we have a fair value gap at old highs. I can't add because I've already taken 2 partials off. I've taken profits, partials, twice now. With this candle running above here.
Yeah,
and this
why
candle
would you
running above
add
here.
more after you've taken
And then-
partials twice? What?
Finally, screenshot your 1 minute ES chart here. Where? Right on that very candle. So at 10:36. Yeah, 10:36. I got this already in there. I'm sorry. 10:36 candles right there. Look down at the bottom of the chart, right down here. Okay. 10:36. On that candle, I'm saying at that moment, as it's going through it, you want to screenshot that because it'll help you trust holding on positions. Even if you get out of your paper trade because you can't handle it, still screenshot your chart if you have the ability to do it when it happens and goes to your levels that you called for in your own analysis. And to prove, okay, look over here. There's no executions, right? See any arrows popping up? Okay, now I'm going to move this over. Right in this fair value gap, in this fair value gap, in the bullish order block, reclaimed order block, I want to see it stay open. The partial running above here, the other partial here, and the other partial here. So when it runs above, it gives me my 10 contracts, and the last 2 come off at logical places where 30.85. That was the level I gave in a tweet, which doesn't appear here in my example, but you can see it. It's just too many things that pop up on this chart to show it as I want to see it. And then finally, getting up into 38.96 and a quarter. Okay, and that, my friends, is no other arrows. See that? Right in here, right in here, right in here, 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 and here. All the levels. And look. See them? And no trickery. Here, I'll move the chart around so you can see that it's not
pretty cool.
Photoshop. And it is what it is. They won't get wider either. They're not drawing arrows. I had another person say, "Oh, you're drawing the arrow." If it's drawn, they'll be wider and they'll move farther away. They stay in the same position all the time. And drawn arrows don't give you the little tick down here where you actually get down and you hover over top of it, and it doesn't give you the pop-up where you actually execute it. So yeah, that doesn't work when you consider that now, does it? All right, folks, and that'll be it for today. Hope you found this one insightful. I'm sure I'll be talking to you through
long,
and other
boring, but another episode in the books. Yeah, I'm just gonna keep watching these, bro. I don't care. I don't care how long it takes. I don't care if I have to watch every single video on ICT's channel. I'm gonna do it because I don't care. All right. Next video. Let's do this. I'm not stopping, bro. I'm not stopping. Let's go to episode 7.
Alright folks, welcome back. This is our index futures review. And obviously you can see we had a pretty dynamic day today. I'm going to take your attention to this down closed candle right here. And this high, and this higher high. This pattern right here, from high, low, higher high, this is my bearish breaker.
This is a breaker because we make a higher high and a lower low. So high, low, higher high, lower low. This lowest down closed candle is a breaker.
Okay, so we can see how inside of this imbalance, you can use that, yes. I'm looking at this breaker also. So why didn't I call any higher level than 39.69 today? This is the very reason why. Now, could it have gone higher? Absolutely. Did I hold to 39.69? No, I got stopped out prematurely, and I had to get away from the computers, and my attention had to be elsewhere. So, long story short, I get stopped out. It is what it is. But I managed something for you today. Walk you through it minute by minute on Twitter, and you're welcome to go through the tweets on January 9th, 2023. They're all there. Nothing edited, nothing deleted. Okay. So, contrast this breaker, where the market goes up into that, which is mean threshold. Half of an order block is mean threshold.
Wait.
Half of
an
imbalance.
You can have mean threshold on a breaker? I did not know that.
23. They're all there. Nothing edited, nothing deleted. Okay. So contrast this breaker where the market goes up into that, which is mean threshold. Half of an order block is mean threshold.
You can have mean threshold on a breaker. It's good to know.
Half of an imbalance, like this here, to here. That is consequent encroachment. So there's several things there. Notice that. Half of this range, approximately, is about right here.
If it's
may have half of the...
If it's half of a gap, it's a consequent encroachment. If it's half of a breaker or half of a order block, it's a mean threshold.
Breaker here, right there. Okay. Add to that, once we drop down to the hourly chart, the levels I gave you this morning before the market started gyrating. Okay. Now, some of you are like, okay, that's great and all, but what's it going to do next? I'm watching how we react on this candle here. Okay, so this open.
To me, this looks like accumulation, manipulation, distribution, but we'll see.
On this candle here, I'm watching that. That is a potential order block that I like. We'll see if it wants to get down to that and show some kind of respect there, but if it doesn't, this one here mean threshold of that candle right there is the last line in the sand. If it fails, the whole price higher, then we're going to most likely attack the sell side here. It would need to get back above half of this wick on a closing basis for me to feel bullish again. Okay, so it makes it real short and sweet. And we're going to drop down to the hourly. Right here's hourly, even the S&P. And here's our daily volume imbalance. And we have a fair value gap there. So we have institutional order flow entry draw right there. Going down just a little bit into the gap. And rallying up to our levels that I shared on Twitter this morning. We have a gap opening here. So it's a new week gap opening. We'll look at that in lower time frames. And also notice how we found some support right at the top of that old daily volume imbalance. Pretty cool, isn't it? This is exactly what you would expect to see from support and resistance, but it just simply never works that good when you try to draw highs and lows and diagonal support and resistance that doesn't exist. I know some of you get mad when I say that, but the algorithm has no respect for that kind of thing. Okay, but let's drop into, let's actually go back a little bit. I want to show you where I anchored these levels right there. Okay, so this area right here is where I have the high of 39.69 and a quarter and the low of 39.59 and a half. This candle's high. You're looking at that value right there. That candle's high, 39.50 and a half, and this candle's low, 39.69 and a quarter, which is this level here, watch. That candle's low, 39.69 and a quarter. And that's what you see those levels here. So what's happened was the market trades down, comes back up, trades down one single pass, comes up, stops there, goes lower. So it left an inefficiency here. So that's a fair value gap. What kind of fair value gap is that? A SIBI. Sell side imbalance, buy side inefficiency. Okay?
Bro,
so it's going to want to see
I wish he just explained it simpler, like, hey, if it's a bearish for value gap, it's a SIBI. If it's a bullish for value gap, it's a BISI. Because he makes it sound like, it makes it sound like it's more complicated than it is.
Move back up into it. And we see that actually occur today. Beautiful. Look at the bodies of the candles respecting the high of that fair value gap. Isn't that beautiful? Like that, to me, never grows old. It's such a beautiful sight to see. And when you see something perform as you'd expect it to, and it's been codified the same way for years, it just keeps going over and over and over again. The same logic is always unfolding. And you keep worrying about whether it's going to fail or stop working. Keep trading it until it stops working. Let's do it that way, okay? For all of you have this concern that what I'm teaching is going to make the markets change or stop working or stop following it, just keep trading it until it no longer works, okay? Just do that and you'll be fine. Now, one of the things I'm concerned about is if we came up here, and it may be a little too early to tell, I don't know, but if we lose this fair value gap, okay, because that's the next one down here, between this low and this high, equilibrium, let me show you what I'm referring to now. Equilibrium's here. So below equilibrium, for a discount, we have this here. Okay, so if we get below this, man, look at all the...
Yo, what up?
Low,
Adaze. Yeah, bro, we're just locked in. We're just watching the 2023 mentorship. I'm on episode 7.
This low, this low.
Yeah, dude, I'm locked in. If I have to watch every single video on ICT's channel, I will. I don't care. I'm gonna get better at trading.
There's a ton of money just sitting right there at 38.18 and to 30 even. Like, enormous amount of liquidity down here. So, I'm watching this here with the expectation that if this gives way and it goes down below and comes back up and acts as resistance, it doesn't need to do that. But if it did something like that, then I would be looking for a nice run up here. But I'm studying it, watching, see what we get from here. But let's flesh this out a little bit more. We have a little bit of a fair value gap in here. And we trade down to that. You'll see that when we drop down to 15-minute time frame, which we're going to do right now. And this is the level and levels that I showed you today in Twitter. And if you're not a subscriber to my Twitter feed, I know some of you are like, oh, I'm not going to get on Twitter. I'm not going to do it. Okay, well, you're not going to be informed. Okay. I mean, that's what I use to alert everyone. It's a nice function for folks that don't follow me with English. If you're outside of the country or outside my native tongue in English, that is easily fixed by using Twitter because you can click the translate thing on each one of my tweets and it'll translate it for you. It's also real time, just like me giving you a text message right from my phone to your phone. I'm going to be worrying you all day long during the New York session. Okay, in the morning hours between roughly 8:30 and to 10 o'clock. Okay, I'll probably worry you to death, with lots of alerts and such. But if you want to learn how to do it and you want to have a minute by minute until we start on the February 7th live streams, this is the way I'm going to do it. Okay, so if I'm tweeting too much or I'm too busy, just turn your notifications off and look at it after the fact. Okay, I block people that complain because I'm giving you my time for free. Okay, and if you're going to give me your criticisms and that you don't appreciate being, very that many times, then unsubscribe and go follow someone else. I really don't. I don't mind sending you on your way if you're going to be disrespectful. So the low and the high.
Yo, what up, Ashik? Bro, we're locked in. I'm gonna keep watching these until, I'm gonna watch these for as long as it takes. I don't care if I watch every single video on ICC's channel. I genuinely just want to become a really, really good trader. So yeah, I'm just gonna sit here. Yo, Bardo, dude, Bob. Yeah, I did know it was you actually, Bardo. I did know that was your account, Bob. But yeah, bro, we're locked in right now. I'm on episode 7, and I'm just gonna keep watching these. I don't really care what anyone thinks of me. I don't care. I thought, I'm gonna be watching this anyway because I want to, so I might as well live stream it while I'm doing it. And if anyone wants to watch it with me, they can. But yeah, I'm just locked in right now, and I don't care if I have to watch every single video on ICT's channel. I want to get better, so.
That fair value gap. Here it is here, and here. Okay. Here we have that hourly fair value gap, and the top of that daily volume imbalance, that right here, this orange shaded area. That's what.
Yep, I'm grinding. Thanks, bro. I covered the video. I actually covered your trade in a video. So, you should check that out. I don't remember when it was, but it was like earlier this week. Don't put the video in 2x. It's 1.5x, dude. He talks slow, bro. It's fine.
We were looking for as an upside objective last week, and it got to it, and then we found some support there. Okay, and then the market rallies, trades up into the low end objective. I was not a participant to the 59 level. I rounded it down to 59 during the tweets, so you'll see that. And then on my chart, it's set to 39.59.00 level because I was roughly doing it with my eye. But this is actually the measurement between the high and the low of that fair value gap on the hourly chart. So the mid-range of that is consequent encouragement, and it's 39.59 and 3/4. So that way you know that's the actual level. Once it gets,
bro, please, that's where the real gem is. What? You actually think I'm going to get more out of it by watching a slower version of the same exact thing? What? Explain yourself, because that makes no sense. I mean, I understand him. It's English. It's not like Spanish. I can still understand what he's saying. I'm going to watch it in 1.5, dude. I completely understand it. Like, if I wasn't able to understand what he was saying, then I would definitely do 1x. But I perfectly understand what he's saying just fine. Oh, yeah.
to the top of the hourly fair value gap.
If you give me a good reason for why you believe that, then you can do that. But for me, like 1.5x, I'm pretty clearly able to understand every single thing he's saying. So
Universal, small little gap in here, trades up into that beautifully, sells off. Here we have a civvy, market trades right back up into the civvy, leaves someone open.
Look at how this is a old bullish for value gap, and we inverse it and we retest it. Once again, we're using an old inverse for value gap and we're retesting it. I think that's really actually pretty fascinating.
See if it's going to be heavy and weak. Market trades lower into the daily volume imbalance, down into our new week gap opening. I mentioned this a little premature, and I'll tell you the reason why I did that later on. And trade down into this imbalance, and finally, while we're doing our discussion here, it's trading down into that. So just a beautiful breakdown, crazy meltdown on S&P. To me, I think this is noteworthy. I think we probably, most likely, and I'm prepared to be wrong, but we most likely put the high of the weekend probably already. And it'll be interesting to see how we trade now going forward. That's my opinion. Don't bet the farm on it, but that's what I'm thinking we've seen so far.
Interestingly, what time frame is on? Is he on 15? There's probably a 5-minute change to delivery here. So there was probably a flow state entry within here.
And let's go down to more than 15 minute chart. Let's go to a 5 minute.
Yup.
Right, so now we're going to get
literally right here. 5-minute change state delivery. Flow state entry is right there. And standard deviations of this manipulation leg, we distribute down to these lows. Bro, flow state is OP. Flow state, I know he's not even talking about flow state, but flow state is OP. What it does, that slow processing will make your mind to think in subconscious. You will not know while watching it, but in meantime, it will create a great impact. I mean, my time is valuable, and I'm not trying to waste it, but I'm also trying to be smart about it. And if I can understand what he's saying at 1.5x, to me, that's all that matters. But you know what? I get what you're saying.
A little bit more busy on the chart. Some of these things are going to be a little clustered up, and I apologize, but there's been a lot of things that was being discussed today. And we have sell side below these relative equal lows here. The market drops down. This candle here is 805. There really wasn't any news driver today, so you have to wait until 9:30 opening. Okay, so I tweeted that, said let's just relax and let things pan out like they would. And I drew your attention to a breaker on the 1 minute chart and 5 minute chart. And the range on the 5 minute candle right here at the 735 candle. That's what I wanted you to draw out in time, extending that out. And it was a little bit choppy. Took out the sell side here, then took out the buy side here, traded down to the order block. And I mentioned this also on Twitter, so that way you can see that one here. And then we were consolidating around inside the breaker, which is exactly where I told you to take your rectangle on the 5 minute chart and extend it out in time. And then we went down, whipped through at 9:30 open, took out the sell side here, traded into an order block right there. Now I did not mention this much.
There's 8 people watching? Yo, there's 8 people watching? That's crazy. That's crazy. I thought it was just one person. Well, anyway, just so you guys are aware of what's going on, we're watching the 2023 mentorship. I'm going to be watching it anyways, and so I thought I might as well live stream it because, you know, what's the point in watching it by myself? So, yeah, if you guys want to watch it with me, feel free.
And I got disoriented because I was trying to do the folks a favor that cannot trade ES and have to use the US 500. So I was toggling back and forth with my charts, you know, looking at one chart with the US 500 and looking at the chart for ES, which is the market I actually trade. And I got disoriented, you know, back and forth looking at it because, like, what? So I said, okay, note the new week opening gap down here. When we went down here like this, I said, okay, note that. And that was an error on my part because you can see it in my tweets where I mentioned right when they're going down like this and coming back off of it, I'm highlighting this.
Bro, you're funny. Dude, I feel like everyone has to just do their own thing. And just because someone can't understand it at 1 speed or 1.5 speed doesn't mean someone else can't. For me, I can understand it perfectly fine at 1.5 speed. I have no reason to watch it at 1 speed and waste my time because ICT talks really, really slow. Yeah, we're locked in. We're locked in. Let's go, coolest kid. We're locked in.
Because I thought I saw something in the US 500, but was referring to it as if it were this chart here, ES, for S&P 500 futures. The prices are going to be slightly different, okay, if you're comparing ES and the US 500 chart. Now, look at the US 500 chart before I close this one out. But the market reversed in here, and I said, okay, we're back inside the breaker. I said, return your attention back to 39.50 up here when we were in here. Then go back into the tweets, and you'll see that's the case. It rallies up, and then we took out this short-term high, and I said, okay, when you get to your fair value gap, which we'll see right in here when we drop into it. 1 minute chart. Let's go right into it. This is already getting long-winded. It's okay, ICT. We like the long ones. And other folks, you're making videos too long. We could have done this in 5 minutes. You could have done this video in 30 seconds, ICT. I'd love to see you do it. Do it all live, mark it up like this, and then come back and explain it in 30 seconds where it makes sense, where it's useful, not just, this is what it did.
Sweep, break of structure, fair value gap, retest, fair value gap, retest, and we expand higher. 2022 model is actually kind of OP.
All right, so this is your 1 minute chart. So we had sell side below here, wicked down through it, came back above, came back down to the order block here on the, I believe that was the 8 o'clock candle. Let's see. Yeah, 8 o'clock candle. So we found some support there, watch and consolidate. And I mentioned on Twitter that we would likely rally higher and reach up into the short-term high here, and then we got 12 handles of a run, 10 to 12 handles. That's okay. You would say right now, this is a partial. You would mark that as a screenshot that we can see what it looks like. So from here to here, that's a bread and butter setup. Then we came back down.
I actually don't know what a bread and butter setup is. I need to learn that.
And this is the range I told you. The drag out crossover, your 1 and 5 minute charts. That's your bullish breaker. The market wicks down at 9:30, open, takes out the sell side here, then comes back inside the breaker. So I switched gears.
So we sweep out the low, retest the breaker, and then we retest this breaker, and we continue higher.
And tweeted, so take your attention back to 39.50, and then it rallies up. And right in here, I mentioned that this candle right there, you'll see that tweet at 9:45's candle, you'll see a fair value gap, and it just was engaged here.
We have this as an inversion for value gap. This is a nice trade you could have taken on IPGs. with Dodgy's model.
And look for it to rally up to 39.50.50, and it rallies up. And we have a small little gap here. I don't believe I mentioned anything about that at the time. We were just watching price. And then it rallies up. And I mentioned, okay, if we go through 39.50.50, have 39.59 noted on your chart, which is half of the hourly imbalance. Here's the high of it. Here's the low. And I know some of you that are brand new, this is like flying right over your head. But I promise, if you keep showing up every day, it will start to make sense. Like anything else, it takes time. Repetition builds understanding. And even if it's boring or if it feels like it's complicated right now, I promise you, it gets easier. It just looks very, very busy, especially when you start seeing me annotate it.
I like how we sweep out this low, we break this high, and then fair value gap, and then we expand. And then we get another fair value gap right here. And we already used the fair value gap, but we use it again. This is a reclaimed fair value gap, because even though we already use it, we use it again. And then we use it again. So anytime we use a fair value gap more than... I literally learned this weekend. Anytime we use a fair value gap more than once, that's a reclaimed fair value gap.
Live in February. So you'll see me doing this stuff live, not just in a stack chart. I'm doing this that way I'm not rusty. I don't want to spend 2.5 months not looking at price and start doing live streams. Okay, I want to be right in there, getting close to the marketplace, and that's why I'm doing what I'm doing. Plus, I'm engaging you to look in your own charts. So anyway, the fair value gap, we trade down into it here, rallies up, cleans up the relative equal highs. I took a partial. Oh, I forgot. I know some of you like to see these proofs. Okay, look over here. You see any arrows popping up? No. Okay, and we're gonna take it over here. And there they are. Here's the arrows.
Dang.
Okay.
So I guess you could consider this a break of structure, even though it's kind of not super obvious that we break structure. We have very good displacement and this fair value gap forms. So I think the key with break of structure is it's not like the objectiveness of whether we get a candle body close above a wick. It's more or less just, is there obvious displacement? And in this case, there is obvious displacement. We have a fair value gap that gets formed, and you can enter on that fair value gap, and then we expand higher. I think this is a screen time thing, but let me know what you guys think.
See that? So inside this fair value gap, I'm buying these candles. Actually, we're above the 39.50.50 level. After, okay, notice this. Go look at the times. Okay, this time here is 9:59. I am posting tweets talking about how this would be a partial when it went here. I have to wait before I do my exit, because I don't want to be accused of pumping and dumping. Okay, I'm not running anything like that here. So if I tweet something, I have to do whatever I said after I tweet it. Not, I'm going to get out of the marketplace, and then I'll tell you should get out of the marketplace. That's unethical. I wouldn't do anything like that. And buying it, I'm calling it before I do it. Then I'm engaging it. So my entries are going to be slightly off.
Dang, there's still 5 of you watching. That's crazy.
Later than my ideal, because I'm giving you a tweet in advance about what I'm expecting. But it's always going to be after I tweet. So it's not something I'm trying to prepare a big move because all of you are following me and your belief is you're all going to push the market. I think that's nonsense. Okay, it's nonsense. So first of all, the market doesn't work like that. I'm not going to push the S&P market around 20, 30 handles with people following me on Twitter. That's not going to happen. So
it's easy till you have to see when it plays out in the chart. Yeah, that's why we're watching this. That's why we're observing it, and that's why we backtest. Because every time we backtest, we get a little better. But I agree with you. It's not. It's easy, but it's not.
So, but to combat the people that's going to be saying this, because there's no doubt going to happen, because they say all kinds of things about me, terrible things that aren't even true. But you're seeing now that there's truth behind everything I'm saying about the algorithm, the fact that I know it like the back of my hand, and it repeats. You can learn it. It's a transferable language. So it runs up and it allows me to get out here above the relative.
Yeah, same. I just learned a lot from Dodgy and Screen Time as well, but I don't know. I think the more you learn, like in whatever aspect, the better you're gonna get. So I don't know. It doesn't have to be from Dodgy. It doesn't have to be from me. It doesn't have to be from ICT. Just keep learning and then decipher what information makes sense to you and what doesn't.
Equal highs, you can see that here at 39.56.5, so one full handle above this level here. And then I put a stop loss in right below the high end of that fair value gap because I didn't want to be babysitting it on my phone. I couldn't keep track of it because I was going to be away from the screens. And I just put the stop loss here. Told everybody it's either going to hit my limit, which I had sitting at 39.59 even, or stop me out. And it stopped me out. And then right at my stop, which I made public, isn't it interesting? It rallies all the way up to the high end at 39.69 and a quarter, and just a little bit above it. Relative equal highs are formed. Then it breaks down, shift in market structure, breaks lower, fair value gap, shift in market structure.
Interesting. Break of structure right here. This is a really tiny fair value gap, but I guess this is a fair value gap. And so this supports price to go lower.
Rallies up, sells off. Half the imbalance from here to here, that's consequent encouragement, is accumulating short positions. Failure to get there, that's a sell. Right there, that candle right there, that's a sell.
Yeah, we also get a break of structure here and a retest of the fair value gap here. Do you have a Discord group? Yeah, it's in my bio. You should definitely join it, bro. Definitely join it.
And it just keeps on melting. Consolidation going into the latter portions of the late afternoon, and then bang. Just a beautiful meltdown. And I realize this is still up here. Apologize. And there we are. Just a wonderful, wonderful day. Technically, just beautiful. And all of this here is a market maker sell model.
Yo! He does the grand reveal at the end. Dude, he's just casually like, yeah, and by the way, it's a giant market maker sell model. That's crazy. Man, I wish I could backtest this day. I guess I could theoretically, but I'd have to go back 2 years. But I guess we probably pushed into... I'm guessing this is a higher time frame fair value gap. That's what these lines are. But look how we push up into the fair value gap, and then we push lower. Flow state, guys, if you guys don't know what flow state is, you got to start using flow state. It's like higher time frame gap, lower time frame change state delivery. Once we get an August change state delivery, you enter on that retest, and then we expand the opposite way.
What's below the consolidation? Sell side liquidity. We rally up, buying inside of a breaker. See, you all think it's just, you gotta wait for it to come back up and then buy it right there. Yeah, that's the infantile approach to doing it. But if you know directional buys,
wait.
you know the
What?
next
What did he
draw
say?
liquidity, which was going to be this level up here. See, you all think it's just, you gotta wait for it to come back up and then buy it right there. Yeah, that's the infantile approach to doing it. But if you know directional bias, you know the next draw on liquidity, which was going to be this level up here, which I shared a tweet and saying this is where we would be. Then we have a fair value gap inside of a larger 5-minute breaker.
So you basically, what he's saying is you can basically buy on the close here and on the retest of this fair value gap. So when we close, either when we close above this breaker, when we retest the fair value gap, or when we retest it again, all of those are valid entries, basically is what he's saying.
It's obvious. It wants to go higher. So you want to accumulate like smart money does and buy it while it's inside the breaker. And then when it expands, you know you're on side. You don't need to wait for the breakout like retail. I don't do that. I do not trade like that. I know where it's going to break out before it's going to break out. And then I can trade inside that consolidation right in here. And keying up on what? Let me take that off. You can see that fair value gap right there. Let me take this off. You can see that little imbalance. Let me take that errors off. From this candle's high, that candle's low right in here. Trace down to consequent encouragement there. Perfect. And inside of this up close candle, which is what? Bullish breaker. From low to high to lower low, right inside this range here, that's where that fair value gap happens. If you're bullish and you have that right there, folks, is a unicorn. It is such a beautiful, beautiful. Hear that? That's
Dang, there's 5 people watching.
I'm telling you, that is.
Same, I learned from screen time and other YouTube videos, or other videos on YouTube. I never watch ICT mentorship next month. I'm watching all from 2016 to 2025, no joke. I never watch ICT mentorship next month. Yeah, guys, I don't know, like, I've never watched actual ICT, besides I finished 2022 in core content, but, like, I'm getting to the point where I'm like, I just want to say I've done it. 2, like, what's the downside? What is the downside of me watching these? Okay, like, I wasted my time. Like, benefit is I actually learned some secret sauce in the middle of it, right? And so I'm just going to be watching this whole thing. I don't care how long it takes. I do not care. I am kind of just crazy a little bit, and that is just who I am. I'm going to watch this whole thing, so.
Inside of this up close candle, which is what?
But like I said, guys, this was a nice breaker entry. We close it. So this would also be a flow state entry because we close above this breaker. We retest this breaker. So 1, you can enter on the close. 2, you can enter on the retest. 3, this is a sweep break of structure for value gap entry right here. So first, flow state close entry, flow state retest entry, sweep break of structure for value gap entry. And in all cases, we expand to buy side, this blue line here, and then this blue line here.
Bullish breaker. From low to high to lower low, right inside this range here, that's where that...
Watching it is very good. You also learn a lot and experience too. Yeah, there's literally no harm in watching it. It's like literally the more screen time and the more you watch, there's no harm in it. There's only benefit.
Everybody got happens. If you're bullish and you have that right there, folks, is a unicorn. Is such a beautiful...
Wait, listen to that, what he said.
Right in here. Chase down consequent encroachment there. Perfect. And inside of this up close candle, which is what? Bullish breaker. From low to high to lower low, right inside this range here, that's where that fair value gap happens. If you're bullish and you have that right there, folks, is a unicorn. Is...
See, hear that? That's a unicorn right there. These up close candles are a breaker. Low, high, lower low, higher high. Overlapped with the fair value gap. So this breaker and fair value gap overlap, that's a unicorn right here. That is a unicorn entry. This spot right here. Low, high, lower low. That sweeps liquidity. Higher high. Retracement to a fair value gap. This is a unicorn entry. And then we expand up to buy side, this blue line here, and then this blue line here.
Such a beautiful, beautiful... Hear that? That's my excitement. That's I'm pounding my hand here. I'm telling you, that is one of the strongest algorithmic entry patterns you can ever have, especially if you have just taken out sell side liquidity at the opening price. Or opening on 9.
That's so interesting. So the key with the unicorn is you want to see it take out liquidity. So low, high, lower low, that sweeps liquidity, higher high, and then that unicorn is just, the rest is history.
10:30, and you see that happening here. That's why I'm not afraid of entering here.
But like I said, the more we watch this, the better we're going to get. It's not, who cares about, the little details. The more we watch, the better we get.
If it comes back down here, it's not going to. It's not going to. It's just like a launching pad here, and then it leaves it. And then every little imbalance in here, you just keep adding to it and waiting for it to go up. But unfortunately, I couldn't babysit it. I put the stop loss there, made it public. They tagged it, and then we're out on to where I was expecting it to go.
Yeah, exactly. That's why flow state is so OP. Is unicorn is literally just the same as your flow state retest. Unicorn is the same as your flow state retest. That's why I love flow state retest so much, because it's literally just unicorn. But the nice thing is, you not only have it as a unicorn when it's a flow state retest, you also have it being sponsored by a higher time frame key level. And that's why I prefer the flow state entry more than the unicorn, is because the flow state entry is being sponsored by that aligned time frame key level. That's why I like the flow state better.
It hit the objective I told you to take your attention to, the new weekly open gap here, and then the coup de grace was our imbalance down here, which it just beautifully laid itself right down inside of it. So, my bias for the rest of the week will be looking and favoring shorts. Unless we get through half of today's wick on the daily chart, I'm bearish. All right, so I'm going to try to run out of here before I do the US 500. This is the hourly chart. And this is one of the reasons why I got disoriented looking at this market, because it's easy for me to lose track of where I'm at if I'm looking at different markets all the time. And that's why we will not be doing Forex and bonds and crude oil and gold. And I'm not having your way mentorship, on the live streams. I'm literally going to be looking at one market. I'll give you a markup on what I think may happen, like I did this morning with the US 500, and you're just going to have to watch this yourself, because I literally lost my train of thought today with this. And I know some of you are like, oh, that doesn't make sense. You should be able to. I should be able to do a lot of things. Okay, I should be able to leap tall buildings and stop bullets and by holding my hand out. I should be able to do a lot of stuff according to all of you. But I'm not
there's still 5 of you watching.
I'm not your superhero. I'm not the world savior. I'm not the Forex Jesus. Okay, I'm literally trying to do the best I can with focusing on what it is that's happening real time, explaining it before it happens.
Once this video ends, I'm gonna be done. So in like 20 minutes, but also I'm watching it on 1.5 speed, so probably like 15 or 10 minutes.
Trying to stay focused so I can do it well, and I don't want to dilute my attention. And today it happened. Like I already know if I look at anything beyond just one market, it's going to be problematic for me, and I don't want to be frustrated with it. So we're going to do it the way I want to do it. But looking at the US 500, you can see the prices don't line up because they're not the futures market. It's a CFD. So it's going to be a little spotty. It's going to act like, many times like the dollar index, where it's muddy looking sometimes. It won't be perfect like you would expect the euro and the pound and the Aussie dollar, those types of pairs where they're a little bit more liquid. This is pretty much moving in concert with what the futures contract for ES did, but it isn't going to be identical. Okay, for instance, the high end and the low end of that hourly fair value gap, which if we scroll back here, you can see the anchor points for it. They're really nice, but we trade above it, well beyond it on the CFD.
We dig deep into that fair value gap. Observe that.
Versus the futures contract. But we ultimately see the market trade here, like this. So
here's our flow state close entry when we close below this down close candle, and then also flow state retest entry when we retest this down close candle.
In the 15-minute time frame, this is what I shared today on Twitter. This chart, just like this, all these levels, and we ultimately did what? Ran up outside the range that I was looking for ES, and then it broke down and traded down into the lower objectives. So I'm not going to sit here and try to convince you, because you're going to see a lot of this year. But my expectation was I wanted to see it go up into the hourly fair value gap here. It could have whipped through it like this, not like this. This is something completely outside of the expectation I had for ES, which is why you don't see it there.
Look at this inversion for value gap used as support after we inverse it. For value gap forms, we inverse it, retest of the inversion for value gap, and then we go run all this liquidity.
But the CFD on US 500, which is what we're looking at over here, that's the symbol, okay? This is grossly out of line with what I had expected in the ES. So the measure of precision is going to be skewed when we compare and contrast ES versus this here. Generally, they will move in the direction the same, but the levels of precision and the entry points are going to be slightly off, and it's going to already know that it's going to frustrate many of you. I can see the complaints already coming in, like, I made this for you. Okay, I didn't do anything with US 500. I'm trying to do whatever I can to help those individuals that can't trade the ES futures contract. But if I were you, okay?
Yep, exactly. Anytime we get an inverse fair value gap, it's the same as a BPR. So fair value gap forms on the buy side, fair value gap forms on the sell side. That's an inverse fair value gap. It's a BPR. An inverse fair value gap is literally a BPR by definition. How long have you been trading ICT? A little less than 2 years.
It would be a good investment for you just to buy the live data, which is extremely cheap on TradingView. And I do not have an affiliation with them. They do not give me any kickbacks. I have no business relationship, partnership, nothing with anybody. Not a broker, not a funded account, nothing. I have no business association with anybody. I'm telling you, it's worth your while to invest and get live data for ES and NQ futures markets. That way, you can spend this year with me, learn how to do this, and just simply take that information and apply it to this if you can't trade the ES, if you're outside the States. And you want to use your MT4 brokers or whatever. All of the things I'm going to teach you work, just the levels aren't going to be exactly the same. That way it'll save you the insanity and being frustrated and why it doesn't line up, because I'm not going to be spending every other day answering, well, my chart looks different to your, we should already be past all that. Your chart, if you're looking at ES, is 10 minutes late or behind because I'm looking at real-time data. So you're going to have to...
Only since March. That's crazy, Haney. You've gotten good. You've gotten good in just a matter of a few months. That's crazy.
Avail yourself a certain resource, which in my mind is cheap. You're not paying me. You just have to pay for the data. And if you had a broker and you're trading with ES, you're paying for the data there too. Okay, so there's no escaping it. You got to do it some way. But I know some of you are spoiled with Forex because you can just pull up a chart and it shows it real time and it's free. Problem is sometimes Forex isn't going to be a market to be playing in, and that's why I'm trying to broaden your horizons. And I'm
but
back to
look at how when we have a fair value gap, when we have a higher time frame key level like this 1 hour fair value gap, a lot of the time we are going to dig deep into it, and you have to understand that's part of how the market moves. It digs deep into our key levels, and then we get the change state delivery, and then we get our flow state entry or flow state close or whatever. Once we've dig deep into the key level, and then we have gotten our change state delivery. Yeah, you're locked in, bro. Haney, you're locked in. I love it.
Futures. Last bit of business, and I'm going to close this one up. All right, so this young man here is one of my students. I'm not paying him, and he doesn't get anything from me except for the fact that I'm giving him a nod publicly. I have a lot of funded students all around the world, different walks of life, and I have a lot of privately funded with their own money students that are doing exceptionally well. A lot of folks...
Semi-profitable. I've gotten 6 payouts. Lately, I've been in a break-even phase.
That are under my tutelage don't like to have the attention drawn on them because I'm very polarizing. And they know that the people that don't like me are most likely going to spread the hate and vitriol towards them as well. And that's unfortunate, but it comes with the territory. This industry is extremely cutthroat. It's extremely complex, and the competition sometimes likes to play dirty, okay? And they think that they can talk about you or your family and try to fill the internet full of lies and things. And then you have to either ignore it or just do you, like I'm doing me, and I'm proving I can do this stuff. And it's going to be the moniker I say all the time, every week, every day, and it won't stop. Well, this young man here looked past all of that stuff that's always followed me along over the time I've been on the internet since, well, he wasn't alive during the 90s when I was on America Online. Clearly, he's a young man. But he took it upon himself to get in there and learn how to do it. Looked at the mentorship lessons, endured all the adversities, and didn't listen to everybody else saying, you can't do this, or this is fake, or this is that, this one's a scammer. He still delivers pizza, all that kind of stuff. This young man was able to take out by his own efforts. I did not coach him into buying and selling any specific thing. He just did it all by himself and was able to withdraw over $250,000 through several prop firms. So
That's insane, bro. That's the dream. We gotta lock in, guys. We're gonna be like this guy, Paladin. We're gonna be like him. We're all gonna withdraw $250,000 from prop firms. I mean, I'm already funded $700,000. So now it's just a matter of, can we not lose the accounts, and can we lock in? Can we lock in, get the payouts, and can we make bank? Can we do it? And I really do think we can.
openly and publicly, this is the highest earner through funded account trading of all my students that at least have made themselves known to me. I have a lot of folks out there that's made big money. Okay, some of them are six figures, 80,000, 50,000, 60,000.
Yes, sir. I'm already funded 700,000, bro. I have all the accounts. I just have to not lose them. Number one, not lose them. Number two, get more accounts. Number three, get the payouts. And we are all going to get big payouts. Big payouts. Because guess what? Who else is watching the 2023 mentorship front to back? Who else is watching this on a Sunday afternoon when everyone else is taking naps and eating food and doing all this other stuff? Guess what? We're showing up. We're here. And we are watching this thing front to back. We don't care. We don't care. We're just going to keep showing up. We're going to keep learning. We're going to keep getting better. We don't care if we have to watch every single Ice-T video that exists on the internet. We don't care. We're going to do it. Because guess what? We want to become the greatest traders of all time. We know what it takes. We know that this stuff exists. We know that it's real. We know fair value gap support price. We know inverse fair value gap support price. We know how the market moves. And we aren't gonna stop. We're not gonna give up. We're gonna keep going, and we're gonna keep going until we all get these $250,000 payouts. Not just Paladin, but all of us. Let's keep going, guys. We're almost done with this video. 15 minutes left. Actually, 10 minutes left, and it's on 1.5 speed, so we're gonna keep going.
They have done those things, and you can see their withdrawals, you can see their certificates, and some of them are being interviewed from the actual companies. This young man was interviewed recently by the funded trader, and I have no affiliation with any of these companies. So I'm not saying you should go to any one of them. That's why I don't talk about it specifically. But this young man has shown himself to be able to do it. And let's be honest, folks, $250,000 is $250,000. And I'm very proud of him. I'm proud of his efforts. I'm proud that he stuck with it and looked past all of the things that people say about me or my concepts, or just make up all kinds of lies and things, because they don't want you to succeed. That's just the bottom line. Okay, and they know if you listen to me and follow along and you'll learn how to do this, you will never fall victim to their black box stuff, their retail rehashed things that are just simply nonsense. Okay, $250,000, folks. That's not demo.
Prop firms, they're literally in the business of people who don't know what they're doing. And it's just crazy because, yeah, 99% don't, 95% don't, 90% don't, but that 1 to 10% that do, you can pull in $250,000 like this guy. You can be like Paladin. And that's where